Hello, this brief video is going to talk about ESG, investing, environmental, social, and governance. Investing, you may also have heard it referred to as sustainable investing. For a situation to be sustainable, that means it can be maintained at a certain rate. An alternate definition is that it can be upheld or defended. So I think that's something we would all like for our portfolios. And if you want your portfolio to be sustainable, then it's important to make sure that the companies with which we are investing have sustainable business models. The E in ESG stands for environmental. So you can think about, the direct impact that any particular business might have on the environment, but a lesser known example of the environmental factor is how does a company handle extreme weather? You can think of recent examples like wildfires or extreme cold and the impact that those situations have had on various public utility companies and others. And these are both factors that, while you might not think of as, okay, this is how a company impacts the environment, it's the opposite. The environment impacted these companies and really rocked a couple of publicly traded companies. The S in ESG is for social. So here's an example. Data privacy is actually a social factor. And I'm sure, here it is, June 22nd when I'm filming this. I'm sure there's going to be a headline probably later today or coming up this week about the next company that's going to have a hacking scandal. You can think about all the impacts here, whether it's lines at the gas pump or getting yet another email from a company where you've shopped maybe years in the past telling you that your information was leaked and now you have to keep track of your credit monitoring. And all of these things, of course, feed through to certain stock prices. The G in ESG is for governance. So here are a couple examples of governance issues. One of them is fair CEO pay. And that's important. One, as a shareholder, right? Any cost that these companies bear is, in a sense, coming out of the profits available for shareholders. Also, if it gets too extreme, a company's management can be pulled before Congress, and that oftentimes is bad for the share price. Another example is good accounting practices. You can think of many examples over many years where there's been an accounting scandal, a company wanted to hide an expense or show a higher profit, and eventually it comes to light, and when it does, the share price usually suffers. So environmental, social, governance, in large part trying to avoid problems that might hurt a share price, but also looking for those best practices so that a company can grow sustainably over the long term. All these examples I've been mentioning share prices. I just want to mention quickly that the world of bond investing can also be sensitive to ESG factors, to sustainability factors. Of course, if you have any questions and you'd like to know more, you're welcome to contact us at Glassner Carlton Financial.